And this is what the Federal Reserve is getting so wrong once again. They are driving, looking in the rearview mirror, completely oblivious to what lies ahead. Because they're looking at the economy. They're looking at all these jobs and this low unemployment rate. And what they don't realize is that all these jobs were a function of this free money that they're about to take away. The 0% interest rates and everything that came around it, the housing bubble, the stock market bubble, all that paper wealth and the effect that it had on consumption, on employment, all this is about to go away. The Fed is about to pull the rug out from under everything it built, and it's all going to come collapsing down. It's just the Fed, once again, doesn't know the difference between a bubble and legitimate economic growth. It thinks we have a real economy. It thinks there's legitimate strength there. That's why Powell is confident that we could raise interest rates to fight inflation and everything's going to be fine. It's not going to be fine because, number one, yes, we can raise interest rates, but we're not going to raise them high enough to fight inflation, but we will raise them high enough to cause a recession. But not just a recession, a depression, a financial crisis that is worse than 2008. That's what the markets don't seem to get, because I think the reason you're seeing this weakness in gold and silver stocks and some strength in the dollar is because the markets believe that the Fed is going to fight inflation and they're going to be aggressive, but they don't believe it's going to result in a severe recession. They certainly don't believe it's going to result in a financial crisis. So the markets still believe that the Fed can do the impossible. So what's going to happen to turn this dynamic is investors are going to have to figure out what's going to happen. Now, either they're going to figure it out on their own or the Fed's going to tell them. Now, my guess is that the markets will sense the Fed's pivot before the Fed actually pivots. So I think at some point you will see a move up in gold and silver, a big move up in these mining stocks, and a rollover in the dollar. Now, those two things may happen at the same time, a decisive move up in gold and breakdown in the dollar. In particular, if these things happen with the bond market continuing to fall, meaning long-term interest rates rise. We see rising long-term interest rates, a falling dollar, and a rising gold price simultaneously. That will be proof that the markets have figured it out, and they figured it out before the Fed admits it. Now, if they can't figure it out and the Fed surprises everybody with its pivot, then the markets are still going to make that move. They're just going to make it later and in a more spectacular way, because at some point, the Federal Reserve is going to recognize that its fantasy of successfully fighting inflation while not hurting the economy just didn't happen. And at some point, you're going to see a wave of layoffs, because once you raise interest rates, you completely change the nature of the economy. As I said, all these industries, housing, autos, technology, retail, are going to be hemorrhaging jobs, and all at once. So we're going to go from a very low unemployment rate to a very high unemployment rate in a matter of months, maybe just 1 or 2 months. You're going to see massive job losses that are going to completely surprise the Fed. And it could easily happen this quarter. And if we get big job losses this quarter, then we're going to have a recession, because we already have 1 quarter of negative GDP. If we punctuate it with a second quarter of negative GDP, we're in a recession.